down for the great advice that we've had. If you're startups, you need the disruptor, the translator, and the plumber. And also need to attract agile, innovative, young, multidisciplinary, regulatory compliance and financially aware graduates or young people into the banking industry. And being an ex-banker myself, an investment analyst, I can totally agree with that, having sat through all those numbers. We're going to continue the theme now. We're going to talk about fintech, so we're going to build on this, Fintech 3.0. It drives Web3 infrastructure and addresses regulatory challenges and, of course, fosters inclusive growth. We're going to gain insights now from UAE's pivotal figures on investors, regulators and banks as they chart a path towards global leadership in, of course, the emerging digital economy. Fintech 3.0, architecting the future of global finance. Joining me on stage is Mohammed Al-Balushi, CEO of DIFC Innovation Hub. He's been spearheading key initiatives like DIFC Launchpad and the Dubai Fintech Summit. So come on up to the stage, Mohammed. I think you are around. And I'd like you to sit in seat number 2, please. Faisal Al-Hamdi, the managing partner at Further Ventures, chairman of Zero2 as well, and board member at Weo Bank. So a nice connection there. Please come on to the stage. And Gaurav Dar, the Group CEO of Marshall Fintech Partners and MENA Fintech Association, dedicated to fostering innovation in the fintech ecosystem. And moderating this session, we've got Josen Ragabar, the chairperson at Ikineo Ventures, UVU Africa, and the Invest Group in South Africa, driving inclusive growth. So welcome back to the stage from yesterday. And we look forward to your panel.
Joining us. So as Rinit said from our last panel, before the previous panel was talking at large organizations that run at 100, we're really back in that 0 to 1 space. They're really exciting stuff. And today we're going to explore how fintech is evolving, where it's evolving to, and what are the leading people in the region doing in terms of positioning themselves as investors, as policymakers, as ecosystem builders, and operators in this new world. The region is really taken a long-term view on Web 3.0 or digital assets. There's been strong leadership from the region all the way through. Even though the hype has disappeared over the last few years, there's never been more on-chain activity. There's never been more people building in the space. And this region has really been at the forefront of doing that. So I'd just like to start off by some introductions about yourself and what your organization does, because you've been really at the forefront of pioneering an ecosystem of leading innovators, talent, regulators in the space. What are you seeing for fintechs that are really pushing the envelope and evolving into the Web 3.0 area? And how are you shaping the ecosystem at the DIFC to accommodate this and foster that?
Sure. Good morning, everyone. I represent an entity called the DIFC Innovation Hub. It's technically Dubai's fintech ecosystem, which is home to more than 1,000 fintech innovation startups. It's been an interesting journey. We started our fintech, let's say, roadmap back in 2017 when the entire industry was very nascent. We started with an accelerator program, and I think that kind of created a lot of momentum for us, and it has been a learning journey since. I think it was at that time where we realized that when as a jurisdiction that was created to serve financial institutions and service providers, we realized that if we are to cater towards fintechs and startups, we have to think about it very differently, because the requirements of fintechs are different as opposed to financial services. A lot of these guys are very early stage, not much funding is available. There's also not much know-how also around being regulation, what being regulated actually means, and the culture that they bring, the culture they represent is different. So we had to cater to that. A regulator, of course, we have an independent regulator within the IFC called the Dubai Financial Services Authority that operates a regulatory sandbox, which was created technically to power fintech and enable fintechs to flourish and grow from the DIFC. And honestly, over the past 6 years, all we've seen is growth. Year on year, I think, I still believe the fintech ecosystem is nascent in our part of the world. We just had our first couple of unicorns this year, so we've got a long way to go. But we ourselves, we've seen the potential that it carries. I still remember the days where I think in 2017, 2018, most of the startups would be teams of 2 or 3 young guys trying to create something. And now, if we look at the job creation or the contribution that's coming from the fintech sector, it's quite significant, and we're bullish on it. We believe it will be one of the major contributors. And we also invest in fintech companies. So along with the IFC and along with the Dubai Future Foundation, we have a fund called Dubai Future District Fund, through which we take equity positions. But also to enable fintechs, we take it upon us on also enabling capital for these fintechs by attracting other VCs, by building awareness with amongst family offices to look at this asset class and invest in this asset class. I think one of the key things that we take pretty seriously is how do we enable fintechs to connect with banks and of course regulators, but banks in particular, because those partnerships are essential for them to be able to prevail in the market. And again, I mean, going back to the discussion that was happening before the session, the banks are quite proactive in our part of the world. With all the major banks, we have partnerships with them where they continuously, refer to us and ask for our help when it comes to scouting fintechs that they could potentially work with.
Thanks very much. Faisal, you lead an organization that has really driving the strategic development of the fintech, but particularly the digital asset area. So it'd be very useful for us to share, why the region has decided that digital assets is an area they want to prioritize, invest in, and build in, and particularly which areas your organization focuses on, and particularly how you prioritize your attention and your capital.
Absolutely. Quick background on Further Ventures. Further is a VC fund based in the UAE, and we invest globally, focusing on fintech and digital assets. When we first built our thesis and conviction in the space, we thought about what are some of the challenges that a lot of the fintechs are facing today, which include things such as having sufficient capital to be able to be licensed, so regulatory capital. B, looking at how can they work with regulators on new policies that are still being shaped, and being able to bridge that gap. Thirdly, our partnerships. How can they work with institutions where they could distribute their product and become more scalable? So when thinking about these 3 pain points, we designed Further Ventures to become a co-founder and also investor in these companies. And we decided to focus on a B2B business model. So the question is, how can we embed our products with a bank or telco or corporate so that it becomes more scalable? And so far we have at least, we have 10 companies in the portfolio, and they all touch a lot of the banks in the UAE in the region and the telcos by enabling them to offer novel products, whether it's fintech or digital assets. Quick list of themes, areas like payments. So how do you enable B2B payments using stablecoins? Areas such as how to custody digital assets, how to tokenize products, how to tokenize financial products, and distribute them through wealth management platforms. On the more fintech side, it's areas like SME lending, also wealth management. And we're seeing a lot of collaboration between the institutions and the fintechs from the portfolio. Now, to your point around digital assets, I think that we're quite fortunate that the UAE took the conscious decision about 6 years ago that they want to regulate the space. I think countries and governments have been hesitant, but I think the UAE said, let's regulate the space because the technology won't disappear. Let's learn how to cope with it and shape it. And that's why the likes of Central Bank, VARA, ADGM, DFC have all done a great job in looking at how to regulate the space. And one obvious proof point is around the stablecoins. So globally, not many countries were able to issue the frameworks and regulations of stablecoins, but the UAE did. And the central bank, the UAE, issued the regulations June of this year, and now they're starting to issue licenses to the market. And this is not something that happened overnight. This was 6 years of planning and working towards a vision of how could we enable blockchain as a technology from the UAE to the world.
Thanks very much. I mean, it's remarkable leadership that the region has shown. Gaurav, you're both an investor and you're an operator and entrepreneur, and you're particularly involved in very early stage funding as an investor. Often this Web 3.0 is seen as a hammer looking for a nail, and I'm sure you're seeing a lot of hammers, and maybe are you seeing sufficient nails? So I'd like to maybe obviously please introduce yourself and some of the themes you're seeing, but particularly I want you to give us your insights on real use cases and adoption that you're seeing, both Web 2 versus Web 3.
Sure. So, good morning, everyone. As a background to myself, I'm a second-generation fintech entrepreneur. So, as a family business, we've actually been doing payment technology across the region in 15 countries for 4 decades. So I think perspective, when we talk about this conversation, is extremely key. And what I'm trying to refer to is, if we talk about Web 3, there was Web 2, and there was Web 1.0. And with my exposure from my own background in working in payments for 20 years, what I've seen is with Web 1, Web 2, Web 3, the other way you can look at it in context is local, regional, global. And I think it's this perspective that's extremely important for everyone that's here in the room today to actually understand, with how leading institutions, such as the 2 gentlemen here at the forefront, from 2 parts of the Emirates, are actually leading the way in changing the way the landscape of fintechs is actually now looking at a global perspective. Because from technology, looking at Web 1.1, Web 1.2, the expansion and opportunity for return on investors has also changed. There was no venture capital here 10 to 15 years ago. Why has that changed? Because it's not local, it's not just regional, we're looking at global. It's the first time from the perspective of a very secure ecosystem from a financial, political, governance perspective that can foster the right elements for global technology players to actually call this region home. So that's the first thing I think that was extremely important to lay out as a landscape for everyone here to navigate from a perspective looking forward for the next 5, 10 years as an operator, as an investor, and people who are looking to call the UAE home base to operate not only in the region, but globally. Now, let me put a little bit more about that. The payments landscape was the first truly real opportunity for revenue generation or architecting Web 1.0. With the advent of the internet, apologies if this sounds a bit too obvious to certain people in the groups, with e-commerce and Web 2.0, you got regional takes, and that's what happened. Amazon came into the region, discovered these opportunities of scale which made sense to them and acquired Payfort. That was the first thing that started. And out of these companies came things like Tabby, right? So when you have companies like Tabby that can go cross-country, cross-regional, but be homegrown and become a billion, $1.5 billion company in a span of 4 to 5 years, we couldn't do that previously. And what's happening with Web.3 is the opportunity to create multi-billion-dollar companies in the payments and fintech landscape is a reality. There's a number of operating spaces which are visible, and there are certain spaces which are invisible. If you look at my esteemed colleague and partner who was on the panel earlier, I do a podcast with him, Ronit Ghosh. When he talks about money, what is Web 3.0? It's programmable money. And in essence, moving money from one landscape to another landscape is actually the base foundation of how you can describe every part of fintech, whether it's lending, whether it's BNPL, whether it's transfer, remittances, account creation, products, wealth. It's the transfer of wealth, and it's the transfer of this programmable money. So setting with that context is where I want to just talk about what's happening here. The hammer and the nail is now an open canvas. It's not obvious anymore. The potential is global, and we're doing a lot of discovery. And that's why it's exciting for venture capital at this point. It's exciting to take high risk, high return, high reward, because you're not just looking at local, you're not looking at just regional. You are genuinely looking at global opportunities here. There is no boundaries as demonstrated by COVID for what you can do with a technology business. Previously, I had to have a team in the office. I couldn't have a team operating out of Poland or out of India and Sri Lanka and have that team service my entire GCC or my Africa teams. And I'm in a privileged position, which is why I can provide this information on a factual basis. This is not something that I'm bringing to you from a consultancy report. This is because not only do I have exposure from my own business where we are constantly looking to partner with fintechs, but create our own products and services. And at the same time, because of my privileged position, I've been lucky to invest in a number of fintechs and companies regionally and globally. Today, I have exposure to over 500, 600 companies in my own personal portfolio from my own personal capital. And while that's extremely risky, and some people say quite mad to an extent, I'm happy to say, it's because I enjoy the risk opportunity of learning and also helping operators who don't have perhaps the experience and tool sets of how to navigate this region. There was a folly with a lot of entrepreneurs who said, from outside coming in, saying that they could replicate models of operating this region. The region's very unique, and you have to pay respect to that. So it's been a very fun journey for me, seeing my 1.0, 2.0, 3.0, and I'm very excited to see what's happening in 3.0. If you ask me, particularly to your last question, what are the opportunities in 3.0? It's stable, and it's also global in terms of currency movement. Because, like I said, you've seen the financial centers of the region shift from place to place. I won't mention the previous countries which used to be the financial centers and hubs for this region, but it's very clear the UAE is the #1 secure and stable, forward-looking financial security hub for all products and services, whatever you can think of, for the region. And using that, Web3 from a macro point of view, blockchain and Web 3.0, stable currencies and cryptocurrencies, is the #1 use case of an invisible ecosystem you may never get exposure to on the volume of business in the billions that is happening right now, and again, daily. I can tell you for a fact it's happening because I have exposure to portfolio companies that are actually in this space. That's why I'm giving you this privileged information, because I'm a free agent. I can do that. Certain people with other respect to their positions cannot in different parts of the ecosystem. But billions is already transacting in the background. While we might not see obvious use cases to consumers, such as payments happening, that might be just the tip of the iceberg, and it's actually flipped. So this invisible ecosystem that's serving a global base is the real use case for Web3 that's already happening, and you might not even know about it.
I love that. So talking about some of these invisible, I guess, workings of the Web3 infrastructure, Fazal, in some of the organizations that you're exposed to and the work you're doing, how are whether they business B2B customers or retail customers experiencing Web 3.0 without them even knowing about it, right? So they don't even know it's Web 3. I'd like to maybe explore some of that.
Yeah, happy to do that. I would like to double down on what Gaurav said. And stablecoins are definitely getting a lot of momentum, and the volumes are there. From our side, well, actually, let me tell you when I got my aha moment, because we all have our aha moments, and I remember this, clearly, when I was chatting with one of our portfolio companies called Fuse Finance. Fuse basically enables B2B payments, among other service lines, and they basically work with traders and specifically commodity traders who want to settle payments in stablecoins, so cross-border payments. And I have a friend of mine who is based in London, and he's a global trader of energy. So he trades jet fuels between the UAE and the world. And this gentleman told me that typically it takes 3 to 5 business days for a payment to be cleared through the SWIFT system. And when he realized that he can settle through a stablecoin, the payment is instant and cheaper. But cheaper not because of the transaction cost, it's cheaper because for that period of 3 to 5 days, he had to pay $200,000 per day for storage costs of the fuel. And if you add that up, that's up to $1 million of just storage cost. So with stablecoins, that disappears. So that was my aha moment in terms of how can stablecoins be used for B2B payments. And there's a real use case. They're like real customers. Now the question becomes, how do you shift that capital flow into channels that are regulated? And this is why, from our side, all our businesses are licensed by financial institutions or by regulators. And governments want to shift these flows from off-regulated markets to basically regulated channels. And I think as that happens globally, we're going to see a lot more adoption.
Again, I love that too. Our business operates a stablecoin for the South African rand and building out emerging market stablecoins across African markets, and certainly collaboration with the regulators has been super important from day one. So when we talk about regulation, and we talk about adoption, largely what we really, when you zoom out, we're really talking about trust. Right? Trust in from a regulatory space, trust in the system, trust in brands even, right? I mean, we talk about Web3 being trustless, but actually in the fullness of time, people will still like to trust brands and people that they are giving their money to or moving their money through. Certainly in the DIFC space, how we are creating the region is creating new markers of trust for the space.
So I think, going back to trust, the way things are designed, you would generally want the third party as the trustee who you can trust, and I think hence the establishment of an institution like the IFC or ADGM or VARA that plays the role of regulating and entrusting that organization to do a specific type of activity. So I think especially when it comes to financial services, if someone gets regulated, that's why we encourage people to get regulated, because it's only by regulation that you get the trust of people. Financial services has always been historically a highly regulated space. Hence, the future would require regulation, and it will always require regulation because you're dealing with third-party money. And I think that trust and that brand recognition uh, will only come once you're regulated, and when you're regulated by a recognized regulator, I think that means a lot. And I think we've done that. We've within the UAE, you've got certain nodes that are regulating financial institutions, and let's say 3.0, fintech 3.0 institutions. There's a lot of, we've been quite progressive as regulators, and to be able to move the needle when it comes to championing the future of finance. And we've made, of course, global. We've told the world about our ambitions. We want to be we want to be a global center for Web3, and it continues to evolve. Yes, this is an evolving space. I always tell people, and I usually ask a question as well. Tell me how many people know how to regulate Web3 as regulators. And I think it's a new space. Everyone's learning, so it will go through this cycle, learning cycle. But definitely, I think the more we have progressive regulations around it, the more we build trust, and the more we create success stories, not just in UAE, across the region.
I want to make sure we have some time for. I want to make sure we have some time for questions from the audience. But I want to spend a little bit of time talking about talent and attracting talent to the region and talent into this space, which is very nascent. I mean, the demand for this, for these types of skills and this type of talent is going to increase. How are we seeing good pools of talent in the region? Are we attracting people to the region for this talent? Certainly, maybe Gaurav, you can give us a start in that, and then Fazal as well.
Sure. So there's two types of talent which is actually being developed or being attracted to this region. First of all, let's not forget how young the Web3 space is. 2008, Halloween was the publication of what we know as Bitcoin. Today is a framework, celebration coming up soon. But 2014 is when Web3 was actually quite strongly established with the basis of Ethereum. We're only 10 years old from there. So when it comes to talent, I think the opportunity is twofold, like I referred to. Developing talent here for a global perspective on Web3 businesses is very real. But yes, every big name you can think of in the Web3 ecosystem has been looking to call the UAE home for the last 3 years actively. So out of the 10 years of Web3 being coined, 30% of, or for the 30% of the lifetime of the industry, which is a vintage now, you have all of them here. They're all coming here. And you can throw a name on a dartboard, and they bring talent with them, and then they nurture and develop local talent too. So this simultaneous working of local talent to actually become part of a very young ecosystem and learn, especially as many layer 1 protocols are still being developed, multi-chain protocols now coming into play. There is so much happening in terms of talent. And with AI as well, it's another level. There's a Web3 company I will not name. They're one of the top 5, 10 in the world, layer 1. They have gone on a shopping spree in the hundreds of millions of dollars to purchase AI companies over the last 2 years, and they've relocated that talent here to the point where after 12 months, their layer 1 protocol now operates at something like 8x better than when it used to. Is cheaper, is faster because of compression technology and new security protocols they've embedded. So it's happening here, and it's astonishing. And this is why I'll go back to saying it again. These are global companies calling the UAE home. Web 3.0 is the first real opportunity with all the stars aligned for this ecosystem to do everything global, not just regional. So it's super interesting. The same applies to talent. They all want to live here. The lifestyle is fantastic. My family's been here for 52 years. And we'll continue to call this home for a reason. So no surprise.
So from our side, I'll be a bit more broad when talking about talent, because we see, as Gaurav said, people, companies from all the world coming to the UAE because they see the edge when it comes to being part of an ecosystem that understands the technology and has the regulations to support it. So if we break them down in terms of global institutions, and I'll say what's public, so we know that Franklin Templeton has plans to issue a tokenized money market fund in the UAE. And there are several others out there that are following suit, like Paxos and Coinbase. So I think institutions see that this part of the world is where they can adopt their novel products, and hence talent moves here with them. Secondly, you see that all the major exchanges in the space are in the UAE, and specifically Dubai. And I think we did a good job in attracting the exchanges here. And thirdly, founders. We all know founders that moved from the US, Europe, Asia, because they see the momentum and capital regulations interest. So I think we're quite fortunate in having that.
And just to add on that, yeah, so Dubai and the UAE are emerging as global talent hubs, and it's not just by luck. Yeah, there's a lot of thinking and a lot of planning behind it, a lot of initiatives. So I mean, we continuously work on as to how do we attract talent to Dubai, and how does this become a global hub for talent? Because if you think about Dubai, we've not been historically producers of talent, but consumers. I mean, we import talent, and of course we want to double down on that, but we are also now taking developing talent or upskilling existing talent very seriously. I myself have a mandate on that, and we're seeing the results. I think our mandate is to make sure Dubai becomes one of the top talent hubs globally in this space. Yeah.
Incredible. So before we completely close, would love to welcome some questions from the audience. There's one right over there. There's one over there. So let's start here and then.
Hi, everyone. Thank you so much for an informative session. My question is regarding, since the topic of the summit is next gen, I wanted to know what advice do you have for young investors who are looking to invest in the fintech world? And specifically, what would you say that they should consider when they're looking at the relationship between fintech and the needs and the values of Gen Z and beyond? Because we always have to consider what will be relevant in 20, 50 years onwards.
Before we answer that, let me just take the second question.
Oh, okay. I need to ask a question. Hey, I'm Giri. I'm from the US. I head a technology company. I've been in financial services, JP Morgan and US Central Bank for 20 years. One of the big question that I had with Fintech 3.0 is central banks are coming with CBDC. I want to understand how that impacts the commercial thing, because crypto is still evolving for the last 20 years. So how is CBDC going to impact the regular stable coins and other markets?
Excellent questions. So maybe, Gaurav, you can tackle the first one, is what advice would you give to young fintech investors? And how does that align with the values of this new generation, Gen Z?
I'm happy to have an extended conversation because it's quite a large, broad question you've asked. But if I was to try and boil it down, being time sensitive as much as possible, two big aspects we have to look at. What are your expectations and how much can you risk? and you put that on a sliding scale. So you see what's available to you. Are you able to risk 100% for zero return, and do you have that appetite? And are you looking at a short-term investment or a long-term investment? The advice I would give is try and diversify your portfolio of exposure as much as possible. Try and break it up into 6 or 8 segments of 20% of your savings or 25% of your savings, looking at a 5-year outlook. If you can split your outlook between a short-term review, annual, what assets do I have annualized that I can liquidate versus assets when I invest in them that are locked in for a period of horizon, and then you weight your risk profile of your appetite of how much I can lose and how much I cannot lose. And then what you'll see is annually you'll see a balance. You'll see a balance of your performance of your portfolio to understand the weightage of what kind of segments are proving to actually work. Because the high-risk segments are unproven, but if they scale quickly enough, you have access. So the first thing is having access to the right kind of investments that you can make that are liquid or illiquid. And once you are conscious of that, you'll see how you have access to those investment pieces. And then taxes is another thing that you have to also keep in mind with regards to your domicile residency. So tax, short-term, long-term, access to capital, looking at 1, 5, and 10-year returns on your portfolio. So if you're looking at categories of stable coins, meme coins, things which may be high risk, yes. If you're looking at incremental returns, you might do things like EFTs, which you can get access to through your own banking app. So even WIO, for example, on their stock exchange, Sarwa, Waha, a number of products in the region and globally give you access to EFTs as well. So you get exposure to a basket of goods. But I don't want to take up too much of time. We'll get into these things later, depending on your capital you want to do. So Gen Z, and sorry, in what context?
How do these new, I guess, investments of fintechs align to the values of Gen Z and the needs?
Well, Gen Z at the moment, I don't know how much capital Gen Z has to deploy in terms of what they've created in wealth. So I would say, depending on what your balance is for Gen Z, the opportunity is massive. But unfortunately, so is the risk. So it's always down to your risk appetite.
Yep. Just on the second point, I think honestly CBDCs coming into play is integral to the entire ecosystem of digital assets and crypto. I think it's only when CBDCs come into market there will be wide adoption of digital assets and virtual assets. So I actually believe it's a good thing, and it will enable the entire industry even more. Yeah.
Fazal, do you want to add to that?
Yeah, my 30 seconds on this. I think that CBDCs and stablecoins will coexist for different use cases. Governments will use it for wholesale payments and how they process transactions with the local banking ecosystem. And I think that stablecoins will be used by private companies for things like cross-border payments or retail payments. So I think there's a world where they both coexist.
Thank you very much. We've had a fascinating discussion and appreciate your valuable insights and appreciate your attention. Thank you.
Thank you so much. It's really fabulous to have these practical sessions.